My name is Northstar. I am the Chief Marketing Technology Officer of Friday Viral. And what this is right now is a DeFi Crypto Class. And of course, if you don't know, DeFi stands for Decentralized Finance. Make sure that you subscribe to this channel. If you have not become a subscriber, subscribe to this channel. Give this video a thumbs up and click the link in the description so that you can get access to this page. As you can see on the screen, okay, is a web page for FridayViral.com, and it is called the First Class Bonus. You're gonna receive $7 Entrepreneur for free. Next thing that you're gonna receive is Learn How to Get Rich Online, which is a PDF or ebook. The next thing is Live from my smartphone. And also be sure to bookmark it, because you won't be able to find it unless you have the link. So since this is about decentralized finance, what decentralized finance is, it is non-traditional banking with cryptocurrency. Now, most people don't even know this, okay? Most people don't know that a bank is not a building. It's not an institution. It's you. A banker is a person who engages in the business of banking. Banking itself is the business carried on by or with a bank, all right? And a bank is to keep money at, deposit funds in a bank, or to facilitate a transaction. Now, the reason why this would apply to you wherever you are in the world is because this is covered by something called Uniform Commercial Code, okay? When you, as a person who conducts transactions, right, you think that you're a customer to a bank. Technically you are, but you don't realize that when you walk into a bank and you make a deposit or you withdraw, that you're engaging in banking as a banker. But by law, okay, and I'm talking about United States Code Service, American jurisprudence, and all these things, this right here is what banking really is. It's the people. Also, as a bank, you keep money in your pocket, right? Or on a debit card or whatever. But anytime that you actually have physical money or you control the money in some aspect, that's what makes you a banker. So with this decentralized finance and how this will apply to you is because there is no government oversight or control. It's, you know, the people making all the rules and engaging in it the whole entire time. So what gives you the authority to be a banker and engage in banking is not the fact that a state or a country enacted a law and said that you have the ability to bank. It's a common law practice. This is something that's been around since the beginning of time. If you are an entrepreneur or a business owner, this definitely applies to you and will help you in a major way. How and why? We all need financing, because in order for us to be in business, to engage in business, we need financing. Let's say you're not an entrepreneur. Let's say you're not a business owner. Let's say that you're someone who just wants access to more money. DeFi is a way for you to get more access to money. And how does DeFi work? You have to have a crypto asset. That means that you have to have like Bitcoin, Ethereum, United States, USD coin, something like that. You'll have to use one of those, or like a DAI coin or something like that. This is the only way that you'll be able to access DeFi and use DeFi. So that means you have to buy a crypto asset. Then you have to also have a crypto wallet, and then you access the DeFi platform and you engage in whatever it is. Now on DeFi, you can be a borrower, you can be a lender, and you can also earn annual percentage yield interest. This means that your interest, you make interest every day, it compounds every day. See, the difference with DeFi, you can use the crypto asset, you get what you need. Then once you do that, if something happens with the loan, like you can't pay it back for some reason, you don't lose the entire value of your asset. You still get to retain value in your asset. DeFi is peer-to-peer financial services on public blockchains. You don't need any paperwork or third party. It's all synonymous. and open to everyone. The concept and use of DeFi is to borrow and lend the crypto asset while making money interest on your crypto asset. You can borrow between 50 to 75% of your crypto, the worth of your crypto asset. Now, here's the thing. Even though that is like the norm, you can borrow up to 90%. Some of those platforms allow you to borrow up to 90%. All this is, what I did is I provided you the names of the top 25 DeFi platforms. When you get on these DeFi platforms, most of them are going to be alike in some ways, but they all generally offer something different because they have their own way of delivering the services, okay? And that's what makes them special and unique. So all you have to do is just go straight down through this list and you'll see who it is. And there's a lot more than 25. I just put the top 25 because it was so many, okay? So you can check that out yourself because you do have access, and all you gotta do is just click on that link. So for those of you who are observing this on YouTube or anywhere else across the web, especially on YouTube, click the link in the description. It'll take you to this page. Click the link in the description. It will take you to this page, and everything that you've seen in the beginning of this video is what you will have and what you will receive, and you'll have access to it forever, okay? I'm not taking the page away, all right? Now let's get into this. Here's one of the special things about this whole DeFi thing, right? So let's say I take a crypto asset like Ethereum. I borrow against $1,000 worth of Ethereum. Now I get let's go with the 75%, right? Now, if you look right here on the screen and you see where it says Power of DeFi, and you see this example where it says borrowing against a crypto asset, and then you have $1,000 times 75% with the APY of 5%, okay? So what this means is you take a crypto asset of $1,000 and you get $750 that you can borrow, right? Now, while your crypto asset is locked in the smart contract, it earns interest. You can't do that. You cannot do that. You cannot do that the traditional way of banking. When you go borrow from a bank, they don't pay you any interest on your collateral. None. Zero. Let's walk down through this Power of DeFi. Now, as you see this diagram on the screen, you see where it says 1,000 times 75%, or 750 times 75%. You got 562.50 times 75%. Now, the reason for this, okay, the reason why I laid it out like this, because I want you to imagine that you want to make more money, right? Or let's just say that you want to have enough money where you can make a move of some sort, whether you're trying to buy a house, a car, you want to take a trip, maybe you have some dream of yours that you want to finance or something of that nature, right? This diagram right here, where you see 1,000 times 75 or 750 times 75 and so on and so forth, it comes out to a value of like somewhere around like 3,000 something plus dollars. So you done took $1,000 and you've turned this into almost $4,000, just by doing this revolving borrow method, right? Now, the reason why I set this as an example, because I want people to realize that it's not just about the amount that you get the first time, it's what you can do, because there's a lot of different ways that you can maneuver to get more money and leverage all of this. And then the great thing is that you can pay it all back instantly, just like that. If the market goes down, it will actually go against your loan. So that means that because you're using a crypto asset, the crypto asset's tied to the market, right? So if it decreases in value, there is a threshold where, let's say, I think some are up to like 96%, some are like 80%, just depends on what you're doing. But once it reaches that threshold, then it'll liquidate the asset and then return whatever's left, if there's anything left, okay, with that. So that's the downside. So you gotta be careful with how you time the market and play the market when it comes to doing these loans, okay? DeFi unlocks your access to borrowing money whenever you need. without having to go through any traditional banks. It allows you to finance anything that you want at your own pace, and you don't have to worry about how you're going to get the money, right? Because all you need is just to get a crypto asset. That's it. The benefits with DeFi would be you open, let's see, you don't need anything. You get access by creating a crypto wallet. It's synonymous. That means you don't have to prove a name, address, or provide a name, address, or personal information or anything like that, right? It's flexible. You can move assets anywhere at any time. No, you don't need anyone's permission to do that. Okay. It's fast. The interest rates and the rewards update rapidly, and you can significantly get higher returns than on Wall Street. And it's transparent. The use mechanics are lending. You can lend out the crypto, earn interest, rewards every minute, not once per month. You can get loans. That means obtain a loan instantly without paperwork. You can trade peer-to-peer, and that's only with certain crypto assets. And you can buy and sell stocks without needing any brokerage firms. You can do savings. That means you can put crypto in a savings account and earn better interest rates than from a bank, okay? And then there's derivatives. You can make long or short bets on assets, other crypto, like options or future contracts. So here are the downsides. You got fluctuating transaction rates. We're talking about gas fees. So if you're already familiar with crypto in some way, then you know that every time you do a transaction, you get charged a transaction fee, which is called a gas fee. Now, if you're not familiar with it, gas fees just simply means a transaction fee. It's just a different term for it. It's because of what it requires to keep the network afloat, all right? Because it's independent. And independent means that there are various people around the world who have networks, what they call nodes, and they maintain those to help the network stay decentralized, okay? So here's the steps to DeFi, right? We have one, and this is real easy. All you do is you connect a crypto wallet, okay? And if you don't know what a crypto wallet, don't worry about it. I'm gonna tell you what it is, all right? The second thing is you're gonna purchase or transfer accepted crypto coins via the platform to send your to your crypto wallet. Third step is you're gonna lend or borrow your DeFi you're gonna lend or borrow on the DeFi platform. This information that you have right in front of you, okay, it is a step-by-step, and all you have to do is go to any one of the DeFi platforms, which I provided you a list of 25, the top 25. When you get on there, it is very, very simple. And when I say simple, it's the same as like when you buy a new phone, right? You just click around and you find what you need and you instantly know how to use it. It's that simple. So you don't need a whole lot of like examples, click here, click there, because all you got to do is just click on the section that you want, whatever you're trying to do, and then it'll tell you, oh, all you need to do is connect the crypto wallet. Then when you connect the crypto wallet, put an asset in it. And then when you put the asset in it, boom, you're ready to go. That's simple. And let's talk about this super thing called a flash loan, okay? So let me tell you what a flash loan is in a nutshell. You don't need an asset at all to borrow. And what you borrow is unlimited. This means that you can borrow any amount that you want, as long as, whatever amount that is in the liquidity pool. Some have hundreds of millions, some have billions, and some just have millions, right? But whatever that liquidity pool has, you have the full girth of that liquidity pool to borrow from, okay? And all you have to do is you borrow, you set up what's called a protocol stack, and then at the end, you pay it back. And it's considered to be one transaction. Here are the steps to a flash loan. It's you borrow from the lender, then you exchange, you buy and sell crypto for a profit. Now that's where the protocol stack comes into play, is because what you're doing is you're going to create a command Okay, you don't have to get all technical. It's already set up for you because all you have to do is just click and say what you want. So you're basically going to go, I'm going from this platform to that platform to sell, or maybe you want to buy at a certain time and sell at a certain time. But either way, all you're doing is just giving it a set of commands, and on those set of commands, it takes those actions. So once you borrow the money, it goes through the protocol stack, and at the end of the protocol stack, it pays the money back that you borrowed, right? So basically, you make a profit and you pay back the loan. You have to settle out at a profit because it's the only way that it's going to work. Now, here is the thing about DeFi, all right? The gas fees are really high. When I was working on my proof of concept, I was going through it to see how it works. When you transfer your money into the crypto wallet, and then you want to go, and I'm talking about the crypto into the crypto wallet when I say money, then you want to take that crypto asset and transfer it on a DeFi platform. When you do that, I seen that it could be between $260 to $430. So with the proof of concept, what I did is I estimated that you need about $1,400 to get started with DeFi. You do not need $1,400 to use DeFi, but in order to make it make sense, let me say this. If a gas fee is between $260 to $430, let's say you have $800, right? Now, if you say, okay, I'm gonna take this 800 and I'm gonna borrow against 400, you're working backwards, right? Because you just paid 400 just to transfer 400. But if you take 1,000 and you need 400 to transfer the 1,000, now you're starting out much further ahead and you have a lot more room to work with monetarily. This is the reason why it requires $1,400 minimum to use DeFi, okay? Now, more than likely you can find a cheaper route to go and do that, but for the sake of this DeFi class and the proof of concept, I put this together so that way you have a understanding on how and what you need to do in order to make it work for you, all right? So I have the proof of concept right here on the screen, and as you can see, it says $1,400 baseline start entry for DeFi, roadmap to start with no money, begin with crypto, start with $100 minimum, right? And then you can start with $20. It takes longer, not as effective as with the $100. You can start with any dollar amount. Reason recommended to start with 100 minimum is so that you can make a powerful impact, so that you can make profits. Now, what I'm saying about this, okay, I'm talking about if you don't have any money. Of course, in order for you to get crypto, you have to have some money. But when we say you don't have any money, you're working with very little. It could be $20, $50, $10, or in this case, $100. Now, I'm recommending that when you start out, that you start with $100, because I've invested little bits of money and made some money off the little bit of money. I've invested $100 and made a lot of money off of it. And there's a big difference between $100 and $10, or $100 and $50, and $100 and $99, okay? Because for some reason, the $100 seems to it expands the ability for the money to grow a lot faster. The one thing that we all have had a challenge with is financing everyone. It doesn't matter whether if you're super rich or you're super poor. Everybody has had a challenge with financing, especially when you are trying to do things bigger than what you've done before. Now, for a lot of people, we all want people to support us, but when someone is not supporting us, what do, right? You might go get a job, you'll find different ways for you to get your own money, for you to do your own thing. But the problem with that is that you're by yourself, it takes an extremely long time, and you struggle hard along the way. With DeFi, with cryptocurrency, it eliminates all of that stuff. Crypto wallets, all right, is what we talked about. There are a lot of different crypto wallets. I'm not really sure on the number. I didn't really get into that. But here's a list of them. MetaMask is one of the most popular. You got Coinbase Wallet, you got Connect, Ledger, Trust Wallet, Taurus, Token, MEW Wallet, and so forth. And the list is right here. So all you have to do is click that link in the description. And when you get there, all the information is right here. Everything that you need to know, all the steps that you need to know. So when you get on a DeFi platform and you're trying to figure it out, instead of doing all the guesswork, I put it right here for you. All right. So basically it's like an instruction booklet. To get the most out of the DeFi, it will take ingenuitive thinking, imagination, and upfront preparation. So this means before you go and jump into trying to get a DeFi loan, right? Now, if you're lending is cool. You don't need anything for that. All you got to do is just put your money in and just let it do its thing. And that's all, okay? But when you are actually borrowing, you have to have a strategy for this. And when you're using the flash loans, you have to have a strategy for this because, okay, if you go with the flash loan, right? Flash loans is a way for you to make money consistently, right? Because you're borrowing the money, but you're setting a stack of commands so that it would do buy and sells, and then at the end you make a profit, okay? But on the other end, if you're just like borrowing off of DeFi, you have to look at the market. You need to see what the market is doing. If it's way up or if it's way down, or if it's up and it's starting to go down and it's continually crashing, you need to be aware of that. So when you go to borrow, you're borrowing at the right time, and you're not going to allow yourself to lose. This is why you have to have a strategy to this in order to make it make sense for you. All right. Now, here's some things that you need to know. DeFi is easy to use, but complex in strategic execution and requires some depth of knowledge in banking for it to be an effective outlet for making money. Gas fees are high. That means they're very expensive, and it's a great idea to only move money around in one transaction for managing gas fees. This is very important because depending on what you have going on and what you're doing, right? You don't want to be making a profit and then transferring that profit into like your wallet and then into somewhere where you can access it to spend it. All right. So what you need to do is you have to basically map out a plan and say, okay, look, I'm going to do this many transactions and I'm not going to transfer any of the money until I get finished, and then when I get finished, then I'm gonna transfer it. But you also need to wait for a certain time of the day because certain times of the day are more expensive than other parts of the day. And that has to do with trade volume. So this is why gas fees can be very low at one moment and very high at the next, okay? Because it's all based on trade volume. All right, next thing is you must use multiple crypto wallets when using different DeFi exchanges to help better the transaction of the funds and to optimize it. All right. You can and will go broke. And I'm going to repeat this again. You can and will go broke if you haven't properly prepared a well-planned and be well-planned when using DeFi, because the gas fees are so high. That is what will break you. All right. And again, click the link in the description. Click the link in the description so you can have access to this page with all the information. This is basically an instruction booklet, okay? The next thing is cryptocurrency is the future, and the future is now. So to fully optimize DeFi, you must fully optimize cryptocurrency by mastering trading in the market. The more money that you make, the more you can do with DeFi. So the more money you make, the more you can do with DeFi. Let's talk about NFTs, okay, and get into the simple explanation of what NFTs are. And I'm also going to tie this in with the whole DeFi thing, okay? So NFTs stands for non-fungible tokens. What NFT is, it's unique and non-interchangeable unit of data stored on a digital ledger, which means the blockchain, and used to represent easily reproducible items used blockchain technology to establish a verified and public proof of ownership. That's the whole purpose of what an NFT is. You may or may not have heard about Tory Lanez. If you don't know who Tory Lanez is, he is an R&B artist, but he's also a rapper. He's what you would consider a major artist in the music industry, right? Tory Lanez, his last album to date is what I'm talking about, because this is December 15th, 2021. So to date, he sold 1 million copies of his album in under a minute, in 1 minute, okay? And he sold all of them for $1. So he sold 1 million copies, made $1 million in 1 minute, releasing them as an NFT. And he did, that was completely independent. So it went all in his pocket. Now, people resold the album, and every time they do that, he still makes money off of it. So even though he made $1 million in a minute, if people just keep reselling it, he just keeps making money over and over and over again. And he minted 1 million copies, and that's it. And that's the other unique thing about NFTs, is that you have to do something called minting. So think of minting like printing money, right? So you issue a particular number for that NFT. So it could be 1 or it could be 1 trillion. Whatever that number is, that's how many exist for that particular NFT. And that is one of the unique things about an NFT, what helps create its value in that. But it's also about the utility of the NFT as well, what gives it the value, okay? So here's another thing that happened with the NFT. Now, you may or may not know about Lil Pump. He's another well-known artist, a rap artist. But everybody's heard about Soulja Boy, okay? Soulja Boy has been around for a very long time. He's still doing his thing right now today, okay? What they did is they went on a investment platform called Republic, and they launched an investment opportunity for an NFT with a single, one song that they're releasing. They set a investment threshold of $500,000. I don't know how long it took them to get the 500,000, but by the time I got the email, looked at the email, I got on there and checked it out. It was at 360,000. I text 6 people, and in less than 20 minutes from the time that I text those 6 people about this investment opportunity, they had already reached their goal of 500,000. Now, this is what makes this so unique, because you're going to start to see a whole lot of major artists doing the same exact thing, because this was very successful for them. So I'm explaining why this means something to us as people who are interested in NFTs and want to get involved in that space, okay? So get this. They said, all right, we're going to release this single. We're going to go to this investment platform. We're going to give people an opportunity to invest in the single. But in return for the investment, we're going to allow them to share in the royalties. This is unheard of. We talking about the general public can share in the royalties of 2 major artists, right? Doing a song together, a collaboration. So just imagine if Beyonce or Jay-Z or Akon or Celine Dion or I don't know, I'm just naming some of the like big, super big artists, you know, like every time they drop something, they automatically go platinum like that, right? But just imagine if your favorite artist, who is, you know, like a superstar, and they give you the opportunity to be a part of their project by being an investor, and they allow you to share in the royalties of that. That is major. That's unheard of. And that's what they did right here on this platform, okay? And they released it, they're releasing it as an NFT. So that's a great factor on that one right there. So then you have NFT bonds, right? So the use and utility is like, you know, private banking. It's a private banking value asset, an investment vehicle. It can be attached to leveraged debt instruments, a trust, and collateralized goods. Okay, so this is some of the uses and utilities of it. And also too, if you haven't heard, NFTs have been being used in real estate as well. So NFTs are going to be used for almost everything out here that has to do with proof of transactions, proof of ownership, proof of transfer, and these things like that. And also as investments as well. Okay, now as a note, it can't be created by anyone with a real asset or digital asset. Doesn't really matter. The bond definition, just for you all to know, because we talked about NFT bonds, it's a fixed income instrument that represents a loan made by an investor or borrower, typically corporations or governments. A bond could be thought of as an IU between the lender and the borrower. That includes the details of the loan and its payments. That means, when they're supposed to be paid and how long it's supposed to last. Bonds are used by companies, municipalities, states, and sovereign governments to finance projects and operations. Owners of bonds are considered debt holders or creditors of the issued bond. Bonds details include end dates and the principal of the loan and when it's due, and to be paid to the owner usually includes the term of a viable fixed interest payment made by the borrower. All right, so that just gives you some insight on what a bond is if you don't know what a bond is. Now, the reason why, because this is all about investments, right? This whole thing is about DeFi, Decentralized Finance. And I'm added the NFTs because you can also use this in financing as well, okay? You just have to, like I said, you have to be ingenuitive in the way that you go about doing this whole thing, all right? Now, the benefits of NFTs, the use and functions, used to make one-of-a-kind digital art items and unique and exclusive properties, ensures proof of ownership. NFTs are independent tokens that are certificates of authenticity, unique, and are not interchangeable. This means that they cannot be duplicated. They're versatile utility and can be used to represent other forms of work or uses. Issued in fixed limited quantities, that's what I was talking about, the minting, for growth and value of the represented item, whether it's art, utility, and other intellectual properties or business transactions. NFTs can be resold to new owners and enables previous owners to receive a percentage of the sale every time an NFT is sold, and this is forever. That's what I explained a few moments ago about the beauty of an NFT and how you can basically make money off of them forever. Okay, they can be passed on to family or beneficiaries and of the NFT asset, can be used to authenticate online and offline transactions. All right, and since we're talking about finance, this applies, right? NFTs are permission-based, includes clauses for purposes and use of that NFT, who has permission to use it, and the use for it.